Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are going over the hottest stock market news stories that you as an investor need to know. So without further ado, go ahead and annihilate that like button right now, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube, and with that being said, let's get right into it. Let's start off talking about the top stock gainers today, starting off with a biopharma company, ticker symbol AMAM, and they experienced a remarkable surge recently, jumping by 103% following a recent announcement that Johnson & Johnson, ticker symbol J&J, will acquire this biotechnology firm in an all-cash merger transaction set at $28 per share for a total equity value of approximately $2 billion. So that's why we see this company surging in their overall share price. We also see American Eagle Outfitters, ticker symbol AEO, surge by 13% today, and they have also reached a new 52-week high after announcing Q4 revenue growth rates and prospected projections of approximately 8%, which is very good. So I'm glad that they had a phenomenal earnings report, and it seems that this growth could continue in this company. Next, let's talk about Harpoon Pharmaceuticals, ticker symbol HARP, which witnessed a very impressive surge of 100% after Merck, ticker symbol MRK, agreed to acquire them at an approximate price of $23 per share for a cash value of approximately $680 million worth of total equity. And we also see Heron Therapeutics, ticker symbol HRTX, which recently surged in their share price recently following a partnership announcement with Crosslink Life Sciences. To round out the top gainers, let's talk about Crocs, ticker symbol CROX, ticker name Crocs, and their share price recently soared by 12% following a very positive guidance update. The company right now projects that they will achieve a record amount of revenue for their full year of 2023 at approximately $3.95 billion, which is an 11% increase compared to 2022. So this was great news, and those are the top gainers. But now let's talk about the top losers. Starting off, we see two companies right off the bat, which is Boeing, ticker symbol BA, as well as Aero Systems, ticker symbol SPR. So what happened? If you didn't know, Boeing's shares recently fell by 9% following a weekend plane accident involving a 737-9 MAX that actually forced the FAA to temporarily ground 171 of their planes. And the specific problem was a manufacturing problem regarding door plugs, which were made by Spirit AeroSystems, ticker symbol SPR, who were responsible for installing the door plugs in question, which ended up failing. So we saw Boeing drop by 9%, and we saw this other company named Spirit AeroSystems drop by 15%. But we'll talk a little bit more about this story later in the video. Next, let's talk about Solo Brands, ticker symbol DTC, which got rocked because they plunged by 34% after the company lowered their overall full year 2023 revenue outlook because they were supposed to bring in between $520 to $540 million, but now their new outlook is only $490 to $500 million, and this let investors down, so that's why they sold off. Next up, let's talk about ticker symbol DADA, which is a subsidiary of JD.com, which recently dropped by 26% in their share price after revealing suspicious auditing practices. And this is the risk you run by investing into other foreign companies, specifically in regards to their auditing history and how truthful they are being. So I anticipate that this company will drop even further down if this is not resolved. But now let's move on to the hottest news stories on the market right now. Starting off, let's talk about the macroeconomic economy, where Congress recently agreed to a $1.6 trillion spending deal, which should prevent a government shutdown. If you didn't know, if both parties did not reach an agreement by January 19th, then the government would shut down, which would leave multiple federal agencies without funding, and this would be catastrophic for the overall economy. However, U.S. lawmakers have recently announced a bipartisan agreement of up to $1.6 trillion worth of funding for fiscal year 2024, and the details will still have to be hammered out between both of these parties, and as long as they do it before January 19th, then we will be okay, and the general economy should go forward as normal. However, if this doesn't happen, it could be catastrophic. But overall, I would not worry about this. Clearly, they are going to increase the overall spending budget or spend more money of $1.6 trillion to support these government and federal agencies. And although they might cut it really close to the deadline, the majority of this has already been negotiated. They just need to iron out a few details. Now, let's move on and talk about the actual stock market. We see the NASDAQ is down, the S&P 500 is down, and the Dow Jones is down, while bonds are up and Bitcoin is up. It's interesting that literally in the beginning of 2024, stocks and bonds are off to one of their worst starts in the last 21 years. So this doesn't make investors feel very fuzzy inside. However, there is good news, which we will talk about a little later, but let's return to that Boeing story quickly. Some of people's worst fears came to light after an Alaskan Airlines Boeing 737 MAX 9 jet, which was on their way to Ontario, had to perform an emergency landing after a panel blew off around 10 minutes after takeoff. Now, luckily, the seats near this blowout of this panel were unoccupied, and it's likely that all passengers were wearing seatbelts, since the aircraft was climbing at that time, which was great news. However, this could have been very catastrophic if somebody wasn't wearing their seatbelt and that panel blew off. They could have been sucked right out of the aircraft. And we've seen huge backlash from this, and that's why the FAA ordered a temporary grounding of 171 MAX 9s across the United States. That's why we saw Alaska cancel 163 flights, which was 21% of their flight books, and we also see companies like United scrubbing 180 flights, among many others who use this overall aircraft. So this was really bad news for Boeing, as well as a lot of airlines, including Alaska and United, among many others who use this specific Boeing aircraft. But we also see Elon Musk, interestingly enough, using, let's say, substances that are not very conducive of a CEO who owns and leads companies such as SpaceX and Tesla. Many investors and even board members are concerned about Elon Musk using these quote-unquote substances, if you catch my drift. And depending on whether or not this violates some Tesla policies, we could see very major impacts and implications in the Tesla share price because of Elon Musk using these substances. Now, again, this is all mainly conjecture from the Wall Street Journal and a couple others. However, I would like more confirmation on this story to know exactly what's going on, but apparently Elon Musk himself reported the various substances that he uses, which would be listed here on screen. So overall, this is not a good look, but honestly, I kind of like Elon. However, this is going to negatively impact various companies that he oversees. Moving right along here, let's talk about the Bitcoin ETF, which is almost cleared to launch. The first ever spot Bitcoin ETF is on the verge of being approved by regulators this week, and this would be a huge, momentous milestone for Wall Street to embrace digital tokens. This would also increase the overall price of Bitcoin, which is currently hovering at around $40,000. This would allow investors to have some exposure to Bitcoin without buying it directly, which could drive Bitcoin's price up extremely rapidly, and this would also help investors' portfolios. However, for me, there is an interesting dilemma on whether or not you should hold it directly or not. I personally would gravitate toward I would rather hold the actual coin directly, but nonetheless, this is a huge win for Wall Street as well as cryptocurrency investors as long as it is approved, but we are still waiting on approval, so investors are at the edge of their overall seats. Now, for upcoming catalysts, we also see that many banks will kick off the Q4 earnings season with JP Morgan Chase, Bank of America, and Wells Fargo reporting on Friday. And investors really need to pay attention to this because it's going to set the tone for this earnings season. On top of that, we also know that the Federal Reserve is anticipated to cut their overall interest rates a multitude of times this year, which is going to be sweet and sour for financial institutions. But regarding the macroeconomic economy, I think it's going to be very positive. And we can also see technology stocks absolutely surge throughout the year of 2024. And at the end of this video, we're even going to go over how well the NASDAQ as well as the S&P 500 stock market indexes and benchmarks will perform this year. So I am excited for that. You should also be aware that Meta, which is the parent company to Facebook, has a very controversial quote-unquote link history that lets their users see everything that they've clicked on a Facebook app unless they opt out. And this is a very controversial thing because not everyone wants to know what they've clicked on Facebook. So it seems that privacy regulators really want to crack down on this overall, and I just wanted to keep you informed about that update regarding Meta platforms and specifically Facebook. We also see Intel selling a stake in their AI software business, which is very interesting. And for me personally, I think this is a huge mistake, and here's why. Intel, ticker symbol INTC, which is a phenomenal company, just released very prominent and notable artificial intelligence news that didn't involve new chips per se to catch up to NVIDIA, even though they are producing new chips to compete with NVIDIA, which we will talk about a little later. Intel has an in-house generative AI software business, which they are now spinning off into their own entity called Articulate AI. So that means Intel and Articulate AI are going to be separate businesses, which I think this is a mistake. If you want Intel to receive investor support, you would want to make Intel as an artificial intelligence company, or at least a company that helps other artificial intelligence companies through their chips. You would not want to spin off your artificial intelligence portion of your company into its own entity, especially if it's not publicly traded. Now, this is being done with some outside help from investments from the data center, cell tower, and internet infrastructure manager called Digital Bridge Group. And Intel has officially spun off their Articulate AI as a separate company. Again, I don't think this is a very wise move, but we're just going to have to see. Of course, Intel did announce a slew of new chips, which is aimed at various AI applications, and they did this back in December. And their first batch of new chips of their advanced machines will be launched from a top semiconductor manufacturing equipment company named ASML Holdings, which I personally hold in my portfolio. So this is a very interesting development that we see from Intel, and I would love to hear your thoughts down below about whether or not you think this is a good move by Intel by spinning off their artificial intelligence business. Now again, Intel is still kind of an AI play because they are producing chips, which will be used in regards to artificial intelligence, but I would just love to hear your thoughts on this. Another story in the news is Vietnam's VinFast is planning to build a $2 billion electric vehicle plant over in India. The company's first foray into India is following VinFast's launch of sales in the United States and other EV markets. However, let me tell you, this is an extremely risky company. Even though it's committing to $500 million for the first phase of construction for this electric vehicle plant to be made over in India, this company is still extremely risky. Even though the facility itself will have the capability and capacity to be able to produce 150,000 electric vehicles annually, right now nothing is set in stone. They're literally just getting started, and this is an extremely volatile company. However, I don't know enough about this company to really have an opinion about it, but I'd love to hear your opinions down below in regards to how this company would compare to other electric vehicle startups, because we've seen a plethora of electric vehicle startups that would go down to become penny stocks and eventually even fully go out of business. And who knows, VinFast could be one of them, or maybe they could be the next Tesla. Who knows? But I'd love to hear your thoughts about that. I just wanted to keep you updated on that electric vehicle update. And we also saw Canoo, which is another electric vehicle company, which is a penny stock trading at just 26 cents, has surged by approximately 14% recently in their share price. And the reason for this is that they have announced that they will acquire a new slew of manufacturing assets to propel their overall vehicle production. The assets would include robotics, various controls, some new equipment, vehicle cabins, and many others. And all of these new assets are going to go straight to their Oklahoma City facility. And Canoo's ticker symbol is GOEV, also known as GoEV. But again, this is an extremely risky company, so please make sure to do your own research. And I'm not advocating to buy or sell any of these stocks. I am just reporting on news. But a stock that I do own and I do buy is Apple, which recently unveiled their US Vision Pro launch date, which is February 2nd. Apple, ticker symbol AAPL, trades for $183.32. And they officially came out with a launch date for their Vision Pro mixed reality headset. And to quote straight from the article, Tim Cook, who is the CEO, said, "The era of spatial computing has arrived. Apple's Vision Pro is the most advanced consumer electronics device ever created. Its revolutionary and magical user interface will redefine how we connect, create, and explore." End quote. And honestly, these are some pretty big claims about this company, but I think Apple could back it up. They start at $3,000 $3,499 for 256 gigabytes worth of storage. Now, if you have glasses or need some type of visual help, reader lenses will be available for $99 and prescription lenses will be available for $149 more. So you would need to tack that on to the overall very expensive price of $3,500 approximately. But in the end, this is a good move by Apple, and I think Apple is really pushing their overall premium that they can put on products because they want to compete directly with Meta platforms. But in my regard, I think Meta actually has the edge in regards to mixed reality headsets, but that would be something for another video. Right now, you just know that this is a huge catalyst for Apple that is coming up on February 2nd. And last but not least, let's talk about how the stock market will perform as interest rates go down in 2024. History says that the stock market is headed higher in 2024, and here's how we know. Stocks typically rise during the 12 months after interest rate cycles peak and then start to drop. And this is due to a swath of economic data. Now, you should know that past performance does not guarantee future performance. So past results never guarantee future performance, and historical trends should be viewed as estimates and data. It doesn't necessarily guarantee that the stock market will surge in 2024, but it seems historically, after interest rates peak and they start to decline, we have a phenomenal year on the stock market. For instance, let's just take the S&P 500 and the NASDAQ composite as some stock market benchmarks. Normally, the S&P 500 returns around 10% to investors in any given year on average. However, the median return after interest rates peak and then decline is actually closer to 16%, while the NASDAQ brings in almost 20%. Literally, they bring in 20.1% as a median statistic. So history says that the stock market could notch double-digit gains during the next 7 months and over the next 12 months as a phenomenal catalyst, especially if investors have the expectation of stable growth and stable interest rates, which will slowly decline, which will provide robust economic growth during this time, which will help the overall stock market. So that is very exciting news, and I am investing hand over fist right now in my favorite companies. And that concludes today's video of the latest stock market news updates. I would love to hear your thoughts down below about any or all of these stories. Go ahead and annihilate that like button for more videos like this one. Subscribe if you are new, and I will see you in the next YT video.